Good morning this Wednesday, the 22nd of November. I'm Grady Wolf, market analyst with Bell Direct. Over in the US overnight, the November equities rally took a pause with the key indices sliding on Tuesday following the release of some disappointing retail results alongside the latest FOMC meeting minutes being released. The Dow Jones fell 0.18% on Tuesday, the S&P 500 lost 0.2% and the tech-heavy Nasdaq shed 0.59%. Clothing retailers Lowe and American Eagle fell 2% and 16% respectively on Tuesday after both retailers reduced outlook for the remainder of FY24 in the tougher retail spend environment. Investors responded negatively to the release of the latest FOMC meeting minutes as officials gave no indication of interest rate cuts on the horizon, and that's despite inflation easing in the US alongside robust economic growth, which supports the notion of a soft landing over a recession. The highly anticipated third quarter results from leading chipmaker Nvidia were released just before 8 a.m. Australian Eastern Daylight Time this morning, and investors appeared seemingly unimpressed with the results and what they saw as shares fell almost 1% at the closing bell on Wall Street. Despite reporting revenue and earnings that beat consensus expectations, the company warned that they expect sales to destinations like China to decline significantly in Q4 due to export restrictions on the region. And in Europe overnight, markets closed mostly lower on Tuesday as investors awaited the release of final third quarter results and ahead of the FOMC meeting minutes released in the US, which came out after the closing bell in Europe. The Stoxx 600 fell 0.1%, Germany's DAX lost just 0.01%, the French CAC fell 0.24%, and in the UK, the FTSE 100 shed 0.2%. The Australian market rally extended into Tuesday's session locally, with the ASX adding 0.28% at the closing bell, as news of further stimulus in China boosted the price of iron ore, and subsequently, the big iron ore miners surged in afternoon trade. The new stimulus to boost the world's second largest economy out of deflationary territory is through Beijing increasing budget spending to support post-pandemic recovery efforts. China is set to deploy a host of local and central government bonds, which will push Beijing's budget deficit up to a two-decade high. The Chinese Treasury also maintained its benchmark lending rates at the monthly fixing meeting on Monday. The stimulus sparked the iron ore price to rise over $134 a tonne, while big iron ore miners including BHP, Rio Tinto and FMG each gained over 1% on Tuesday. The latest RBA meeting minutes were also released yesterday with a more cautious outlook on future rate hikes down in Australia. The minutes noted that underlying inflation was more persistent than expected and the risk of not achieving the 2 to 3% target range by the end of 2025 had actually increased. Housing inflation, wage price inflation and electricity inflation remain the key drivers of Australia's inflation remaining sticky, as well as retail spend persisting and businesses passing on cost increases to customers. At a separate event on Tuesday, RBA Governor Michelle Bullock noted inflation remains the most pressing challenge over the next few years, with a warning that low productivity is not allowing the current pace of wages and unit labour costs to be consistent with better labour outcomes. While the RBA is expected to maintain rates at 4.35% in the December meeting, we may be surprised with another rate hike should inflation show further signs of remaining sticky. On a stock-specific note yesterday, Technology One slumped over 2%, despite reporting a 16% boost in profit after tax to $129.9 million for FY23 and a 19% rise in revenue, while Origin Energy fell 2.2% after a 12-month effort to sell a $20 billion takeover to conglomerate led by Brookfield hit a speed bump when Australian Super, which is Origin's largest shareholder, made a binding commitment to vote no to the Brookfield takeover. On the commodities front this morning, oil is trading 0.34% lower at $77.54 a barrel, despite speculation that OPEC Plus will intervene again with further output cuts to bolster oil prices. Gold is up 1.16% at $2,000 an ounce, and iron ore is up 1.5% at $136.5 a tonne. One Aussie dollar is buying 66 US cents, 97.08 Japanese yen, 53 British pence and 1 New Zealand dollar and 8 cents. Ahead of the midweek session here in Australia, the SPI futures are expecting the ASX to open just 0.08% lower following the sell-off on Wall Street overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has decreased the 12-month price target on Volpara Health Technology from $1.20 to 85 cents and maintain a buy rating on the medtech company focused on the early detection of breast cancer following the release of the company's first half results. Despite revenue increasing 17%, this growth rate in revenue more than halved relative to the prior corresponding period. Bell Potter's analyst also believes slower than anticipated customer implementations are going to be expected in the coming financial years as many clients acquired in the MRS acquisition of 2020 remain on the legacy product rather than upgrading. And Trading Central has identified a bullish signal on Patriot Battery Metals following the formation of a pattern over a period of 17 days, which is roughly the same amount of time the share price may rise from the close of $1.05 to the range of $1.30 to $1.36, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Wednesday, and as always, happy investing.